Guys, again, it's been a while since we've done a little bit one of these webinars, and I thought that this new 941 form that they came out with, boy, it might have been a week and a half ago now, a couple weeks ago, was a good excuse. So here we are. I hope you guys can see me and the whiteboard here. I thought we'd just kind of quickly go through a few things. We have a bit of time here in front of us. So our agenda today briefly is, first of all, we're going to just review, well, there's going to be a welcome, of course. We're going to review the 941 form itself and the changes to the 941 form. Some of the things that we're going to be talking about on that 941 form are the changes to the COVID pay and the, whoops, there we go, malfunctioning of the keyboard or the whiteboard here. The changes to the COVID pay for the new quarter, and we're also going to be talking about the ERC credit or employee retention credit down below. One of the notes on this is the changes that are coming. It's mostly, well, you'll kind of see when it comes to the ERC credit, but changes that are coming to the 941 for Q3 and Q4, which are slightly different than the 940. That's slightly different than the 941 you're going to file now in July for Q2. We're also going to talk about the employee retention credit itself. Go through just a brief recap. I know most of you guys have heard a lot about this before. This is the employee retention credit. It was the thing that was passed already back in the CARES Act, modified in the stimulus package in December, modified again in the American Rescue Plan earlier this year. So we're going to be talking about the 940 or how the 941 interacts with the ERC, but we're also going to be talking about the ERC and how that kind of plays out. And then if we have some time, we're going to talk about PPP Draw 2. There's some of you that are just now getting around to, not getting around to it, but being able to apply for forgiveness for PPP Draw 2. And so I thought we'd talk about that briefly, not so much the qualifications of that, but just some of the work that we've done for that. And then I want to leave plenty of time for questions at the end, if you have any. We have a smaller group today. There was some just under 90 people signed up, which usually means, you know, roughly 60 or so will be able to attend. With a smaller group, you know, not in the hundreds, we left the microphones on, so you guys can actually click the little microphone button, the mute button in front of you. Right now, you should all be muted. I think I muted everybody before we started. The recording will be available afterward, so we'll just post it like we have before and send it out to all the attendees, and we'll go from there. So once again, welcome. You guys know me. I'm Michael Kelly, Silvertrek Systems. The last year has been crazy for us. I'm sure it's been crazy for all the people on this call, because if you're on the call because you're interested in a 941, that means you're crazy enough to be in payroll. And if you're crazy enough to be dealing with payroll, or at least with quarterlies, then you know how everything's changed in the last year. So the good news is that things are looking up, and you know, we're moving past the pandemic. I'm excited for that. I think that this has been an interesting time, a time of growth and opportunity in a lot of ways, although also a time of really of changes and struggle in a lot of other ways. One of the things that we've done in the last year is we've built these some of these custom reports and custom routines. Some of you guys have already used them, but we've also been able to help people just with a vanilla Viewpoint, helping them understand these new laws and get them into place. Although I have to say that there's no way that we could have done that without the people on this call and also other people on the previous calls helping out. There's just too much information for one person to really get through. And I could not have done it. Of course, I have a group of people here. Jenna's on the call with me here. I have a group of people here at Silvertrek that are really good at diving into things and understanding and researching. But even so, there was just too much coming in. It was drinking from a fire hose. So I really appreciate all the help that all of you have provided, and I hope that I can get additional help even today. If there's things that I don't understand or I misstate, please correct me. I would love to have you. I would much rather that everybody get their story straight than that I get to be somehow right. So we will just kind of jump into it here. The first thing, what I did here is I have the 941. I actually just copied and pasted it from the IRS's website here into my whiteboard. One of the first things that you'll see, and I actually put it on the email that I sent out, most of this is the same from the beginning, as we've seen for the last year or so. Namely, we still have these two, 5A I and 5A II, but we have a pretty important box here. And this box right here, I'm going to zoom way in on it, says, include taxable qualified sick and family leave wages for leave taken after March 31st, 2021 on line 5A. Line 5A here is this line, taxable Social Security wages. Use lines 5AI and 5AII only for wages paid after March 31st, 2020 for leave taken before April 1st, 2021. So what that means, in effect, is that we have probably only one payroll. In other words, the payroll that was paid for the week ending March 31st or thereabouts, possibly two payrolls, depending. Those first week or 2 weeks in April, depending on how your pay periods line up, are the only 2 weeks that were tax exempt for the employer's portion of Social Security. Now, that was the whole thing with the COVID wages, is that the COVID wages really kind of threw all of us for a little bit of a loop. First of all, they, instead of just making the Social Security something that you got reimbursed for, you paid and you got reimbursed for, they just said this is exempt from Social Security taxes at all. Well, in the American Rescue Plan, they changed that. The IRS decided to implement that on the quarter end. Thank you, IRS. That really makes me happy. That they switched it so that you do pay taxes on your COVID wages. So specifically, the wages that were originally mandated under the CARES Act last year, under FFCRA, and then modified by the CARES Act. Those wages are no longer exempt from Social Security, but you do get to ask for that Social Security back. Now, the interesting thing about that is that it's voluntary. So I'm guessing that many of you aren't experiencing that. Well, I would hope that most of you aren't experiencing it because we're not seeing as high of COVID cases as we were before. There are many companies, however, that are voluntarily providing this COVID leave, and they're actually providing it for their employees that are going and getting vaccinated, because that was one of the eligibility things that was added in the American Rescue Plan earlier this year. But overall, if I had had my druthers, this is how it would have been implemented to begin with. The COVID wages, in effect, go here for all COVID leave, and it's taxed both employee and employer, or the whole 12.4%. And then only those 2 weeks worth of wages go here. I say 2 weeks, 1 week, the last little bit of January. I can pull up a calendar here. Let's see if it'll allow me to pull up a calendar. Okay, right here. So for the week ending here that might have been paid here, you may have had some COVID leave those first 3 days. Also, for if you pay on a Thursday or Friday, the 1st or 2nd, you may have had some COVID leave for the week prior to that. So essentially from the 22nd to the 31st, you may have COVID leave that you're reporting on your second quarter 941. And if that's the case, that particular leave would go in 5AI or 5AII under the previous rules, the rules that we've been used to reporting COVID leave on for the last year. Okay, so we'll be able to report that there. Now, other changes to the 941 come farther down below. One of the things that we're used to seeing here is the split for the COVID pay, for the FFCRA pay, sick and family leave. We're used to seeing the split between the non-refundable portion, right, and the refundable portion. So these two here are linked, 11B and 13C. This wasn't a large item for most people. This word refundable and non-refundable, it's a kind of an IRS, almost, I would say, misnomer, but then I'm opinionated. Essentially, they're saying that all of the money that you owed to the Social Security, let's just say that you owed for the quarter a total of $100,000 in Social Security wages. That you would subtract out from this your FFCRA or COVID wages. Let's just say that was $3,000, and you would end up with a balance of Social Security taxes owed of $97,000. Well, as long as the $3,000 was less than what you owed in Social Security, this was considered a non-refundable. Essentially, you're just reducing your tax owed. So they're not refunding you anything. You're reducing your tax owed. And since you reduced your tax owed, this is the non-refundable portion, or this 11B here. And for most people, that's all they did, right? Your COVID wages were relatively small, and so therefore it didn't exceed the total amount of Social Security taxes that you had to pay as a company. However, now that we're getting into employee retention credit territory, and that is here 11C for the employee retention credit and 13D, the refundable portion of the employee retention credit, that is that we're linking now 11C with 13D. It's much more likely, probable even, that the refundable portion of the employee retention credit will be used. So again, I'll scroll up to the top, and hopefully I'm not making any of you motion sick. But in this same way, let's just say that you have an employee retention credit that you're eligible for in quarter 2, and just to pick a number, we're going to say that your ERC is we're going to make my math easy, $147,000 here. So when we subtract 97 from 147, we end up with a negative $50,000, or what that means is that your ERC is $50,000 than the remaining balance of your Social Security taxes. So this portion here is going to become the refundable portion of your ERC, and all of the portion that's allocatable to Social Security taxes, or this $97,000, is going to be the non-refundable portion. 97 plus 50 is 147. So that makes it easy. But it's non-refundable, not because you don't get it back, you do. It's because you're just reducing your taxes down to 0. It's refundable then, the $50,000 is refundable because the government is going to refund you this money because you retained employees, even though you have no more taxes to reduce. And we'll go into that a bit more. So you can see that that's there. There are a couple other changes here that are just to think about. Some of you guys may run into them. We're not going to go into them here so much. The non-refundable portion of the COBA premium assistance and number of individuals here. One note, and I almost forgot to add this in. This would be one of those things that somebody would have said after the webinar. Michael, you forgot this. This is 11D and 11B are the difference between the non-refundable portions of the credit for leave taken after March 31st and before March 31st. That's that same key difference. So they do ask you to report those two different ways. As far as I can tell, that there's different portions of the federal government that are funding this. So, and then we have the same thing down here on the 11E. So this is also tied in there. If you're lucky when you're filing your 941 for the second quarter and you do have COVID wages, you won't have COVID wages for those 2 week period that we talked about. Okay, the rest of this is pretty much math. The really good news here, before I move on from the first page, is that unless you have qualified sick leave wages, the COVID wages, before March 31st, if you have no COVID wages, or you have COVID wages that are only after, then Atrix will actually do the math for you correctly in this section 5, which is wonderful because Atrix hasn't been able to separate out those COVID earnings correctly since the COVID wages came out, and now they're able to. I still highly recommend that you pull up your employee accumulations and that you verify everything, especially because I know that a lot of you changed the basis codes and everything a little bit later on. I'll be getting back to the basis codes once I pull up Vista, and we talk a little bit more about the COVID wages. So, probably the most complicated portion. Well, I would maybe I give it a 50-50, but there's the one portion is trying to separate out those wages for those few days in March that you were paid in April. That might be difficult depending on how you run those. You run your reports. I would look at payroll registers, for example, time card data, if you kind of get into that. And the crazy thing is it doesn't actually affect you because you're still eligible even under the newer law. You just get a refund for your Social Security wages or taxes, the employer share of Social Security taxes, rather than just having it non-taxable. So it ends up being the same. It's just a little easier to report. So splitting that out, if you do have COVID wages, that'll be a little bit complicated this quarter. The other thing that will be complicated is splitting out the refundable versus the non-refundable versus the refundable portion. They do have new worksheets for this. So I'm going to scroll over here. I copied this. We have worksheet 1 is for those 2 weeks that I was talking about. This is the same worksheet that we've been used to using for the sick and family leave. Essentially, this just once you fill out this worksheet, which allows you to put in effectively. Here, this is the important one: employer share of Social Security tax remaining. Effectively, this was our $100,000 that I had up above. Then we put in our sick and family leave credit. This is the same thing we've been doing the whole time. We've been putting in how much we have for the sick wages, how much our medical expenses are, all of the Medicare tax, et cetera, so that we can get that amount. We have this family leave wages for basically the same thing, and the employer share Medicare tax, qualified health plan expenses, et cetera. This is a worksheet. This is not reported to the IRS. It's just simply there so that you can work through exactly how to fill out the previous worksheet. Once you have this, we have our full credit for the sick and family leave wages, which is just this plus that. And then we're going to subtract here from here, and we'll get our non-refundable portion. So if I had said this was $3,000 earlier, then our non-refundable portion is $3,000 and our refundable portion is $97,000. If that $3,000 had happened in that 2-week period that right before April 1st that we're still reporting on second quarter 941. So, whoops, I'm sorry, not non-refundable. That is a zero because it's not less than $100,000. So $100,000 is not greater than, or sorry, $3,000 is not greater than 100,000. So it's all non-refundable. I would report all $3,000 over here on 11B, 3,000 here. The next worksheet is a new worksheet. This is the no. I've lost my. There it is. I lost my way here on my copy and paste on my whiteboard. Here's worksheet 3. This is a new worksheet. This is for leave taken after March 31st. This is basically allows you to go through the same or a similar process. It has just slightly different ways of looking at it. One key difference here is that in step 1 here, you can see that this is our Social Security tax that we're adding up to $100,000 here. Over here, this is our Medicare tax that we're adding up. So my understanding is that the Medicare portion of the federal government is the one responsible for funding COVID wages this quarter rather than Social Security taxes being responsible. Doesn't change anything as far as what you get, but since Medicare is a smaller tax, it does make it more likely that you'll end up with refundable versus non-refundable here. So if in this similar situation, you owed the total of your employer share of Medicare tax, let's just say was $30,000 here, and your sick and family leave credit totaled, we'll just say the same $3,000, let's just say $1,500 here and $1,500 here. That's $1,500 for the sick, so $1,500 for the family, and $3,000. We would compare the $3,000 to $30,000, a smaller number because it's Medicare, but the this $3,000 would still be fully non-refundable because 3,000 is less than 30. So we'd have 3,000 here and 0 here. And in this case, we'd be putting this over on a different line, way over here on the. We'd be putting this here, this $3,000 here, the non-refundable portion of credit on 11D, and we'd be putting zeros, of course, down here. So the big difference between those worksheets is that one's comparing it to Social Security, one's comparing it to Medicare. Otherwise, it's very similar to what you're used to. There are a few more questions here, especially related to the employee retention credit down here. So there are some other things that will adjust this slightly, but I think that this is fairly self-explanatory once you go through it. It's worth reading through this. If you're familiar with the worksheet, this worksheet number 1, which we've had even in Atrix inside of Vista, worksheet 3 shouldn't be any major surprise, just slightly different. I have not heard or seen yet from Atrix that worksheet 3 is included, but I I believe it to be. In fact, do any of you guys know, if you can't talk, you can also use the chat. Have any of you seen this worksheet in Atrix? The new worksheet, I mean. I know that the old worksheet was in there. I just haven't seen the new one come out. Feel free and send a chat or just speak up. There's only a few of us this time, so. Okay, so the other two worksheets that we may need to. By the way, these worksheets are simply in the 941 instructions. I pulled them up. In fact, I'll grab it and I'll show you. This is just the instructions for Form 941 towards the end. All of these worksheets are here. These are just PDFs that you can grab. And of course, like I said, Atrix had them, but literally all I did was type in 941 instructions and it pulled it up for me. I just like these worksheets because they make it a lot more clear on exactly how we're doing this. The good news is that I'm going to pull up Vista here. Early in the quarter, when we read the law as it was passed by the American Rescue Plan, it did say to change your basis codes. So I'll show you what that means here in my test company. Randy says that the worksheet 3 is available in the new Atrix 941. Thank you, Randy. Randy is with Viewpoint. I'm very happy to see you here, Randy. Thank you for providing that information. That's awesome. In one of the things that I had recommended that you all change in the last webinar series that we did, or last webinar that we did, was in the deductions liabilities section here. If we went to our COVID wages, let's just go to our sick leave liability. That we had this emergency, all of this sick leave here, the sick leave FFCRA. It's a little bit garbled here in this time, but we wanted to make sure that both the FICA Social Security employee, which has always been here, but also the FICA Social Security employer was added here without the subject only box checked. So previously it had looked like this. Basically, your any kind of sick leave, it had looked like this. We had recommended that for all of your third quarter wages, it would be unchecked. One thing that we didn't know then, because it was only the law and it hadn't been implemented by the IRS, is exactly how they were going to handle the switchover from quarter 1 to quarter 2. So it's possible that you came and checked this box or unchecked this box at a different time than what we would have seen otherwise. For example, if by the time we had that webinar, you may have unchecked it already for the 8th, for the time which would have unchecked it for these 3 days. It would have been very difficult for you to run a payroll with half of it as subject only, half of it not. Basically, you would have had to set up a new deduction liability and have to set up a new earnings code, which I don't think would have been necessary for the split week. And so be aware that this week, especially if you had earnings, COVID earnings or COVID leave taken these first 3 days and COVID wages taken these last 2 days, that it could be split up depending on when you unchecked this subject only box. Now, this subject only box, what this changes is the amount. Let's go down here. I ran my employee accumulations. I guess I'll just show you what I ran. I ran it ahead of time. Basically, I just ran my employee accumulations for my example excavating company for 6/21. I didn't point any employee detail. Basically, this is just the whole quarter. And so you can see this is the total company, and we can see that our FICA Social Security subject and eligible amounts match. That's what we would normally expect, is that those two would match. We would go down to the liabilities. Whoops, what? Yeah, here it is. That's correct. I almost right here. FICA, Social Security, this subject and eligible amount, they match down there. One of the things that we were seeing in previous quarters was that the subject and eligible amount, because that subject only box was checked, didn't match, and we were using this subject amount, sorry, the eligible amount to report in box 5A and 5AII. This is the amount that was, the difference there was the amount that we could say was for COVID wages. So it was a way of us to double check. You can see here that everything matches up because we had no COVID wages that were particularly in that time frame. So just something to be aware of. I hope that you guys have changed your basis codes or unchecked that subject only box, and that and hopefully you got it at the right time early in the quarter so that you can do that. If you didn't do that, uncheck that subject only box, what that means is essentially you've accumulated slightly too little Social Security tax. And if you accumulated slightly too little Social Security tax, then you may have an adjustment to be made when you go to actually pay your 941, or rather, when you go and you do this credit and the credit doesn't match up to the exact credit that you have been taking, if that makes any sense. A little bit beyond the scope of a 1.5 hour webinar, but you would have to try to match that up. It's only going to be off by a little bit, depending on how much COVID wages you have. But bottom line is, on the sick leave earnings codes, you're going to have this. You're going to now have this box here unchecked. Okay. I'm going to switch over here to the ERC and talk through the ERC for a little while and what I know about the ERC. But before I do, does anybody have any questions? You can either ask them. If you're brave, you can just pop on your mic, if you have a mic, and ask them for everybody, or else you can type them into the chat. Let's see here. Trina says, do we need to fix our accumulations in Vista if we had wages in March that should not have been subject to employer Social Security? So Trina, if I understand your question correctly, you're talking about the wages in March that were paid in April. Is that right? Okay, perfect. So if you had wages in March that were paid in April, then your on your accumulations here, just asking, do we need to change our accumulations? Well, let's see. Anytime you change your accumulations, first of all, be very, very careful. You don't want to be screwing up your accumulations for one reason or another. If basically your subject and eligible amounts are different here, do we want to change that for March because you basically unchecked that box slightly too early because we didn't know any better? I'd have to think that one through, Trina. That's a really good question. The part that I wonder about is how is that going to then get reported on those employees' W-2s at the end of the year? It seems to me that yes, we would want to change the accumulations carefully. It seems like that we would likely want to make those particular wages non-eligible. In other words, reduce the eligible amount but not the subject amount in the accumulations table. I know, Trina, you well enough to know that you do that carefully, but the Viewpoint folks on the phone are probably quaking in their boots when they hear me say change your accumulations, because I'm sure they've dealt with a lot of people trying to change things and making it worse, not better. That's definitely being something that you should be very careful about. But yes, I do think it would be better to do that. Reduce the amount of your eligible here. Basically, if we had $3,000 of wages in that first little bit, we would reduce our eligible Social Security for those employees so that this would read 347 in effect rather than 350. Tammy asks, is this being recorded and be available after the webinar? Yes, Tammy, it is, and you'll be able to see it.
Wouldn't the liabilities don't go on the W-2 anyway? Just to deduct them?
Sorry, Gay, I hear you're trying to ask a question, and thank you for trying. Something must be garbled with your microphone, so I'm going to mute you again. I really appreciate it, but why don't you try to type it into the chat? Randy asks, when preparing the 941, will the COVID-related wages still need to be subtracted from the Schedule B? Yes. Yes-ish. I say ish because the Schedule B has to match up with 13A here. So it's not just COVID-related wages, it's all wages, it's all non-refundable credits, including non-refundable portion of credit for sick and family before April 1st, non-refundable for sick and family after March 31st, and the non-refundable portion of the employee retention credit. All of those things have to be subtracted from the Schedule B. And yes, that makes me upset. Like, can't I just give you what my Schedule B would be before those credits and then we'll talk about it? But no. The worst part about that is that it would be even easier if it was the full credit to take it off the Schedule B, but no, it's only the non-refundable portion. Gay, the W-2 should only have the employee portion, so maybe you shouldn't have to change in accumulations. Liability will still be off, but that will be adjusted in the 941s. Thank you, you're absolutely right. Good point. The W-2s are only going to have the employee portion. The employee portion hasn't changed. So the accumulations that we're seeing here are going on the 941 only. If we adjust it on the 941 as you report, your accumulations will be off in that one area from your 941 to your accumulations, but that doesn't actually matter because your 941s are correct. Absolutely. Thank you, Gay. That is a very valid point. Send that man a prize. Okay. Or woman, sorry, that could be either. Let's see here. Employee retention credit, if there's no other questions. One of the things about the employee retention credit is that it is massive. So some of you guys will remember from previous webinars, in 2020, very few people were eligible for it. First of all, because if you got the PPP loan, you weren't eligible to take the employee retention credit at all. That changed in December, but even with the change in December, which allowed you to do both, it had to be a reduction in gross receipts of 50%, or you had to have a partial suspension or a full or partial suspension by a government authority for the period. So in 2020, it wasn't that big of a deal. Effectively, it was only eligible for the first or for the latter 3 quarters, quarter 2, quarter 3, and quarter 4. The amount of qualifying wages was $10,000 per employee, and then that was multiplied by 50% for a total credit per employee of $5,000 possible. Apparently I lost my train of thought here. Let me write those in. 50%. This $5,000 per employee was the maximum you could get per quarter. This was then further reduced by any PPP money you had. You can basically double count it. So if you had a 50% reduction in gross receipts or full and partial shutdown in 2020, you could get up to $5,000 per employee, less any money that had been paid out by the PPP. A lot of people didn't qualify, for one thing, and then the people who did qualify, it wasn't a big dollar amount. But there has been a few things that a few of you that we've talked to that have been eligible for that, and that's great. 2021, however, it became a lot more lucrative. First of all, it's only a 20% reduction in in gross revenues in order to qualify. Second, it was extended in the American Rescue Plan. It was extended all the way through Q4. So at first it was just Q1 and Q2, then it was extended out through Q4. The amount of qualifying wages stayed the same, $10,000. However, the multiplier changed to 70% across the board, which allowed us to have a larger portion, $7,000 per, and $7,000 per employee per quarter, especially for those of you who aren't eligible for the PPP Draw 2 and didn't have a reduction there, is just a lot of money. If you have 100 employees, it's, let's see if I can do my math here, $7,000 times 100. It's $7,000 per quarter. And if you're eligible in Q1, you're automatically eligible in the next quarter or until your gross receipts come back. So you're going to be automatically eligible for 2 quarters. So that's going to automatically be twice that, or $1.4 million, roughly speaking, depending on all of the ins and outs and who started at what point in the quarter and if they're owners and owners' relatives, et cetera, et cetera. So up to, for a 100-person company, up to $2.8 million could be coming to people who have a 20% reduction in gross receipts. It's just a big chunk of money. And it doesn't have the whole stigma that the PPP did as far as the applying for the loan and then getting it forgiven, et cetera, et cetera. It's just a credit right on your 941. So the ERC is a fairly complicated formula in the sense that we do need to apply the PPP, we do need to apply COVID wages and reduce the wages that is eligible before we can get to it. This can all be done with your accumulations reports. You have to run these, or your payroll register. Those are 2 different ones you can do. Run them per employee. So you could create an Excel document to subtract that out. For those of you who were on the ERC webinar before, there was a little spreadsheet that we made to try to help that. Although we haven't updated it for a while, I don't know if any of you guys have tried to use it. But we've also built this just to both to show you how it works and to demonstrate it. Obviously, we like to sell things, so this is one thing that we're trying to sell. But also, I think it demonstrates well what we're trying to get done here, and that is, here's our earnings for the quarter. I ran this for Q2 for a company that had a second draw PPP, and you can see there was no COVID wages for this example excavating, but we had to subtract out the PPP wages. We had to we could add back in their medical, and then we get the subtotal here of all of the wages after taking out our COVID and our PPP here, and then we get our qualifying wages. You can see that the employee number 1 here is the owner. They're automatically excluded. Owners' relatives are also automatically excluded, and then we have any qualifying medical and qualifying wages here. This is capped at $10,000, you can see, which puts our employee retention credit here at 7. And this just comes in all the way here at 116,000. You can do the same thing by figuring out how much your PPP was. Now in this case, for my example, I said that I was funded with a $157,000 PPP loan on March 13th. So that was actually before the quarter began. A lot of you guys that have a PPP Draw 2 will have that happen. you can see here that only 104,000 was actually used in Q2, which means that the remainder of this had to be of this 157 had to be used in Q1. I can click on this PPP details here, and this just kind of shows it, how much was used per employee in the prior quarter and how much was used in the current quarter. And you can see here that the total applied PPP is 157. The current period is 104. So we have an amount that allows us to say the earnings is here. We have to reduce it for the PPP. We have to add back the medical. We get our subtotal. We have a slightly different qualifying earnings because of all of the qualifying rules and get our qualifying wages, of which we get 70% of. So for this small company, they get $116,000. They would also be able to run this for the next quarter on their Q3 941 and get a substantially bigger amount, especially because the PPP wouldn't be applicable at that time. It's all used up. So the employee retention credit is the, I mean, it's just, if for those of you who have a 20% reduction in gross receipts, it's a no-brainer. Take it. So this is $116,000. This $116,000 is what we would then use on, well, on this as well, but I'll do it on my whiteboard here. On worksheet 2 here, which is the employee retention credit before July 1st. This is the Social Security tax non-refundable credit, right? So we're going to put the employee retention credit. Basically, we're taking that figure from Vista, 116 here, or from your Excel spreadsheet, depending on how you've done that. And we're going to put this $116,000 here. Whatever if our Social Security tax was $100,000, of course we would have $16,000 of the non-refundable portion and $100,000 of the refundable portion. Did I do that right? I did that exactly backwards. We would have $100,000 as the non-refundable portion. We'd have $16,000 as the refundable portion. And then that would flow through to our 11C here, 100,000. I'm sure my math doesn't add up anymore now that I added $3,000 there, but I think you get the point. And we have $16,000 of the refundable portion. That does adjust our total deposits for the quarter. Sorry, our total taxes for the quarter, 12. Is it box 12? I said that wrong earlier too. Man, I'm saying a lot of things wrong today. Apologize, Randy, if I'm making your life miserable. The box 12 here, it changes our total taxes, which will change our Schedule B. Our total deposits for the quarter are whatever they are, whatever we happen to do. Whatever we happen to actually deposit in. So that's our total tax for the quarter. That's what our Schedule B has to match to. So we just, by adding that $100,000 non-refundable portion, we're actually reducing our Schedule B. And we're not reducing it all the way either, because this is only Social Security that it's applying to, Medicare as far as the $3,000 above. And so we're still going to have a Schedule B for all the employee share of Social Security and Medicare, and for all of the employee federal taxes that were withheld. Just a quick note, after so this is the second, let's see here. So this is the second quarter. That's going to be the Social Security tax. Third and fourth quarter, they do switch it over to be funded by the Medicare tax. Not a big deal. It's just going to mean that a lot more of it's going to be refundable versus non-refundable. Okay, things always take a little longer than I expect. We have a few minutes left here, and I'll be hanging on a little time after this. If you guys would like to stay, we only have until 9 o'clock Pacific time to go through things. But I'd like to open up the floor for questions on the ERC, and And if you guys have any other questions, just freely shoot them at me now. Let's see here. Chris Bain. Oh, it looks like Jenna already answered. Can amended returns be filed for the ERC if we are eligible under the new rules? Yes, people have filed the 941Xs for already for 2020 and for Q1. So yes, Chris, just like Jenna said. Yeah, Jenna, thank you for that note. To check with your CPA about your eligibility. One of the crazy things about the eligibility requirements is that 20% gross receipts does change based on whether you're cash or accrual. And then it also changes, if I understand right, it also changes based on whether you're at completion method of accrual accounting or you have a WIP method to determine eligibility. Definitely check with your CPA. You'd hate to apply for the credit, get the credit, and then find out later during an audit that you weren't actually eligible. Allie asks, would you file the 941X for Q4 2020 for all credits, or do you need one for each quarter? And Jenna answered already. My understanding is each quarter needs a separate 941X. Yeah, exactly. Just like Jenna and Ali said here, there has been some conflicting information. However, it feels to me like it's safer just to do a 941 for each quarter and get the credit that way, because that's the quarter that you were eligible in 2020, than doing just one. I don't know right now what the IRS says about that. I haven't seen any specific information, and I would love to have specific explicit information from the IRS on that if anybody has seen any. Questions from anybody else? Again, feel free and use your microphone.